All right, so anybody who's new, I see a few people who are saying in the chat or whatever you guys are posting comments in. Some of you are new. You could go to wallstreetjesus.com, okay, and you'll get a lot of answers to your broad questions there, especially initially if this is your first time. All right, you could also get the website off my Twitter handle if you somehow forget what it is. All right, and the thing is a couple things if you're new. If you go to the main page, you can find about the free trial and some of the premium packages on there as well. Also in the product section, that's where you'll get more information on Lucci's course, private Twitter, if you're just looking for private Twitter, not the whole premium with the trading room, chat room package, okay? So you can find the rest of the products under the products tab. But if you're looking for more information, that's under the strategy tab here at the top. All right, and quick, easy, short blogs, easy to sift through. Probably you could do it in a matter of a weekend. And just breaking down some of the key stuff we look at on a day-to-day basis and how we use it, why we use it, some of the terminology. I do have my own terminology that can get quite confusing. All right, so some of the basic stuff here if you're interested in what you hear and this is your first time here, or if you've been here a couple of times and didn't even know this existed. You could go to the website and get all the information there. Okay, and like I said, we offer, and we've continued to offer for a long time now, a 3 free-day trial, no credit card required, okay? So you get 3 days to everything but the private Twitter feed. You don't need that in the trial, okay? But you'll get a feel for, again, what we do on a day-to-day basis, okay? All right, let's get to, let's see, anything going on here? All right, so we got a little green at the open, but a busy week. And I don't see this market getting too far ahead of itself in either direction until we see some of these numbers and the Fed this week. All right. So you got a lot going on this week. A lot of variables at play. This week, I took a little different approach to keep me on the right path. Where are my market updates? All right. All right, so what I did here is I concocted a little bit of an outline for the initial part of this webinar, just to keep myself on a straight line path. I have a tendency to ramble, especially on the more interesting topics. I have a tendency to ramble. I want to try to avoid doing that early on. So some people who are re-listening to this on the recording, or if you're just listening to this on recording, you get the most vital information, the important information in the early part of this webinar, okay? And if you remember, just to go back to last week, I like to give you guys a little quick understanding of, on a week-to-week basis, I like to look at the past week and then digest some of the sentiment, the weekly updates and the whole 9 yards. And then when I like to get to this webinar with my interpretation of all of that. And I like to share that with you initially at the start. And then you, after seeing all the information, right, and the majority of the sentiment stuff that make up all these signals, then you can come to your own conclusions. But I like to share initially, how my interpretation in what I feel things are showing me both on the flow side and the sentiment side of things. All right. And last week, if you remember, the best way to explain it to you guys was I was torn a bit, right? After being a jubilant type bull, right? I think I explained it to you guys as a bull that was giving it to the bears, right? Those tweets and all, rubbing salt in their wounds, a cocky bull. Heading into last week, I felt not less bullish, but not as excited as I was the week prior, okay? And the only reason being was not that there was anything really bearish out there, It wasn't like I was concerned about any major potential downside or bulls were getting ahead of themselves as far as sentiment is concerned. It wasn't any of that. It was basically that a lot of the bullish signals, right, that stemmed from 3 weeks ago and were screaming out to us to lean bullish and look for something to buy in the midst of all the negativity around us, some of that was abating, okay? And a lot has to do with, the rally in prices, obviously, that we've seen in the markets as well, okay? So I was kind of torn where, I still want to be bullish, but I don't want to be cocky. I want to let things come to me in a sense. And another major factor, if you remember, was we were heading into earnings season, right? And I really don't feel comfortable sticking my neck out, especially on the swing side, managing positions going into the heart of earnings season, basically here. All right. So in other words, am I going to go out and start, loading up on a basket of upside calls, okay, knowing that this week was just a week away where we're going into some major earnings here, okay? And the reaction to a lot of these earnings are going to be telling and important. All right, so that's where I was heading into last week. This week, I'm kind of basically on the same premise, okay, where the backdrop, right, over an intermediate term basis is still bullish, but the short term, there could be either further consolidation or some pull, and it wouldn't shock me. But as opposed to where we were in other spots of the market, that would be something, if that did occur, that I would likely become more bullish into, not bearish. Okay, so that's my interpretation of everything I digested over the weekend, and I posted this cute little outline here so we can go over some of the major things. Let me see if I can make this smaller so you guys could see it. All right. So the start, as I mentioned numerous times, and a lot of us get sick of hearing it, but it's important because no matter how many times we talk about it, no matter how many times we tell ourselves, okay, it's earnings season. It's earnings season. The flow is not the same. It doesn't mean anything. You see a big bet, it's tied to earnings. It doesn't mean the same. As we keep saying these things over and over, but you still see, especially if you see people trading in the room and all, still will get excited about a bet and be like, oh, it's earnings. You know what I mean? You have a tendency to forget these things in the heat of the moment. All right. So to start off, this list, and most important than anything else, we have to acknowledge that we're in the hands of the earnings gods, period. Okay? No matter what. So no matter what you may see on a chart, no matter what you may see starting to play out sentiment, no matter what you may see coming out of the flow, okay, the reaction, and that's the next sentence there, okay, even though you hear a lot of people saying the quarter, just throw it away, we all know earnings are going to be awful for the most part. It's true, okay? But the reaction to those earnings and the flow that we start to see come into these names after they report, we don't know, okay? And that will have a lot of very important intel or information on what the next several weeks or couple months this market may have in store for us, okay? So it's important as anything out there, like I said, to be careful and stay away of pre-earnings activity, right? It's just as important to start paying attention to post-earnings activity, all right? And that's the key thing I think we have to keep an eye out throughout the process of this earnings season. And there may be a lot of early tells out there. And what I mean by that, we may start to see, I'm giving a hypothetical here, something I'm looking for, may or may not show up, but potentially maybe we do see some sort of rotation into the economically sensitive stuff, the stuff nobody wants to own right now for good reason, okay? Maybe they report earnings, they're an absolute travesty, but some buying and some constructive price action comes into that selling, right? The whole sell the news theory, okay? So that's something extremely important we want to keep an eye out for. All right, if we start to see little by little, they buy these beaten down names off weakness, off their numbers, you know, that could be not only an interesting setup off that particular name, but could be a tell on the next batch of names to come out that may have been battered, economically sensitive names, cyclical names, that could be turning points as well. All right, so that's what we want to keep an eye on. So earnings trumps almost everything this week. It really does, okay? And here's just another example, because I think a lot of people still don't comprehend this, okay? If we see, I don't know, again, just an example, AMD call sweeper activity, okay? And, you know, there's some nice volume. It's pretty evident they're buying AMD calls, okay? And NVIDIA is reporting that night, okay? The likelihood is that the destiny of those AMD calls will fall into the lap of what NVIDIA does off earnings. You understand? It has nothing to do with AMD. Okay? If NVIDIA comes out and knocks the ball out of the park and the reaction is a big positive, those AMD call buyers are going to look like heroes. Okay? But if NVIDIA comes out, you know, and decides to warn for the next 2 quarters, okay, and that stock's going to get hit over the head the next morning, I don't care what kind of AMD call buying came in, those things are going to be underwater at least at the open of that next morning. You understand? That's what I mean when I say in the hands of the earnings gods. All right, one thing that I acknowledge and made myself understand early on, okay, is that the flow, as much as I have confidence and belief in sweeper activity, right, probably more than anybody out there, I've come to the understanding a long time ago, like everybody else, they have no idea how earnings are going to play out, right? They may think a company might report some solid numbers and maybe there's some spec action off of it, all right? But they have no idea how the street's going to react to those numbers, right? How anybody else in the group who's reporting that same night, how they're going to report and maybe have a big influence on the company you made a play on. So that's why the earnings flow as a whole, you have to take with a grain of salt, okay? And if you say to yourself right at the start and swallow it and absorb this, okay, it'll keep you out of trouble over the course of your career, okay? The sharp money is not playing earnings. Okay, the sharp money is not going to buy weekly calls a day or the day of earnings and try to make a hit. Okay, that's not what they do. If they like and want to make a bet on a company's fundamentals because they think their earnings growth will be spectacular over the next 2 quarters, they will step into the market likelihood over the course of weeks and accumulate a position with time if they wanted to make a bet on fundamentals. Why? Because anything can happen over the course of a week. Fundamentals, you see nothing based off fundamental analysis over the course of a week. But if you have a strong belief that AMD this year is going to be solid fundamentally with exceptional growth, you're going to make a bet over the next 2 quarters to get rewarded, okay? So we all have to get that in our heads. And I know a lot of us who have been doing this a while already know this with earnings, right? Whether it's from a bad taste in our mouth or watching, you know, all the riffraff around us blow themselves off earnings. Earnings is a complete crapshoot. The smart money is not fooling around with earnings. And if you treat it as such, right, like you're going to bet on a bowl game or betting the ponies at the racetrack, yeah, it may be fun. But as long as you understand what it is, right, and you manage your risk appropriately, all right? So that's what I mean when earnings trumps everything and we're in the hands of earnings gods here, okay? Period. On that note, we also have the Fed this week, okay? And, you know, it's pretty, we already know that the Fed threw in the kitchen sink. They did this, they did that. They fired bazookas. They stabilized the market. They're heavily involved in repos and everything else, okay? But what was interesting going into this past week, all right, is that based off these drastic measures that they did take, they started tapering down from those levels, okay? From repos to, I think, buying treasuries this week, right? They're not buying as much, hence tapering, okay? Now, I know there are people have mixed feelings on this, right? On how big of an influence this stuff has on actual price action, whether it's coincidence or not, okay? But whatever your feelings may be, and I think more people think it has a big influence than not, okay? The Fed started tapering at the start of last week, and that will continue this week, okay? Just so you understand that. And we got a Fed meeting where we're gonna get an update on how much more they may taper and what's gonna go on in the future. So that's the importance of the Fed meeting this week, right? Rates are useless. There's nothing going on as far as rate cuts or anything like that. But we're gonna get more information on how much more tapering, if at all, they will start to do now that things have stabilized a bit, right? Because whatever they were trying to do, they did, okay? They put a floor in things. They applied liquidity to certain things that needed liquidity. So we'll see how the lingo is coming out of that, all right? Also something important that a lot of you know we follow in here, right? What lined up with the Fed tapering, okay, and some heated, I wouldn't say heated, warm, short-term sentiment was also an upside niner, right? You guys see all those numbers on my screen, okay? In simple English, all they are to me, I don't care what they are to anybody else, they're exhaustion signals, okay? So when we get a signal, that's an indication for us to look to see if buyers or sellers get exhausted, right? Show some tiring signs at that spot. All right, and we had a niner here line up with a couple things, okay? Not that it means the end of the world, right? Doesn't mean a crash coming to a theater near you. Just means that buyers have a tendency to get tired, right? Show some exhaustion at these levels and to keep an eye out for that. And we had that line up with a few other things that was interesting, right? The tapering, also short-term sentiment going into earnings season, a lot of things, okay? So here's the reaction off that niner, right? No major crash, nothing major at all, but pretty obvious breather mode, correct? Right? It's obvious to everybody. We had a nice little trend here, 1, 2, 3, 4, 5, 6, 7, 8, right? They were showing a little bit of getting tired, and you got this breather, which is healthy. Nothing wrong with this, totally healthy. All right, but we did have a reaction off that exhaustion signal. Why is that important? That keeps things alive in a sense, okay? If we didn't, and you had a rally through this, a lot of things, we would have been in a lot worse shape as far as looking for entries on things, new entries on things, than we are now, because things would have been scorched across the board. Okay, and obviously that means a lot more risk, and we're not interested in that, especially in these times. Okay, so this was totally healthy and a constructive thing that lined up with a couple other important things. All right, over the intermediate term horizon, okay, sentiment is still favorable, right? Has been that way, has been extremely bullish actually for the past month. Okay. we do have some of those strong bullish signals we were seeing across the board start to subside. Okay, so in other words, if you rewind a few weeks back, we had everything firing up, right? That whole chart breakdown, signal breakdown where I put bullish in green and neutral yellow, all that stuff. We had green all over the place, right? As far as the intermediate term time frame, okay? We still have, as a whole, a favorable backdrop, okay? But some of those bullish signals have turned and are turning into neutral, okay? And again, expected when you have a rally and the lows hold for a good amount of time like we've had, no crazy sell-off or anything like that, so totally expected. All right. As far as other stuff on the intermediate time frame that's catching my eye, I don't like where when sectors get broken down here, and I'm looking at sentiment as opposed to each individual sector, I don't like what I'm seeing. Okay, meaning that as a whole, sector sentiment is above neutral. Okay, so I would say warmest, not scorched, but warm as a whole. But you have some key concentrated groups, okay, that are scorched. And you can see here, I mentioned one of them, biotech. Right? Now you look at biotech, or if you owned anything in biotech over the last couple of weeks, right, you likely have made some nice scores. Biotech has been ridiculous. All right. So again, it's not that unexpected, but for me, off my experience, when I start to see all of the sectors as a whole, especially the key ones, start to light up red, okay, that's meant limited upside. Okay, again, breather, consolidation, stuff like that. Okay, sometimes we have a situation where some key sectors are really hot, right? It'll be like tech, biotech, like we have now. But like the financials aren't as hot, or the industrials aren't as hot, right? So that leaves the window open for rotation. Okay, while the whole riffraff retail public has their eyes on the stuff that goes up every day, the smart money starts to lock in some profit and rotate into the stuff that's been lagging, right? And that's where the opportunity is, okay? We have some room for that. It's not like the financials are flashing bullish signals, okay? They're above neutral as well, but they're not scorched like some of the other sectors. All right, so there's room for some rotation, but not that, juicy risk reward that would be the start of a major rotation, in my opinion. All right, I think that we have the possibility of seeing that as we get through our earnings here. And that's what I mentioned here, leave some room for potential rotation into some of the subsectors which have lagged behind. All right, so a lot of this stuff may translate, especially with earnings around, into being more of a stock pickers market. You know what I mean? Maybe the markets do some more of this stuff, but underneath the hood, individual names is where you can find some nice alpha and outperformance. Okay, especially on the tactical side. All right, so a lot of the signals are leaning in that camp right now, as we get ready for a big week of earnings here. All right, what else we got here? Sharpies have been, the talk of this webinar, obviously, has been our favorite topic to talk about. They remain bullish, okay, but no buy signal there. In other words, we'll go into a lot of the stuff I'm talking about here. This is just a quick synopsis if you want to watch it on recording or whatever the case. But Sharpies remain bullish. In other words, net long of risk assets, okay? They've trimmed in a small way their net long position. All right? So for me, and I think we spoke about this last week, right? So for me, a signal to come out of this now, right, would be either some further consolidation or even a little weakness, okay, out of the markets the next couple of weeks. And then no matter what the Sharpies do, whether they put on some hedges, trim some more, or do nothing, we see another spike in that reading that they're stepping on the gas, getting long off consolidation or a pull, okay? And that would be an entry point off that signal, all right? So that's what I would be focused on the next couple of weeks out of that camp. And the riffraff specs, same thing, just on the opposite side. They covered a small piece of their short position. Remember, they've been all in short, okay? They covered a piece of their short position, but they're still short, all right? They're still short risk assets, all right? And this is the bottom line, you know, as an abbreviated post as I possibly could. We got a ton of variables like we just spoke about at play, earnings, the Fed, all right? There's definitely room for further upside, all right? There's not like everything is scorched across the board and I can't see markets trading higher. That's not the case, all right? But I still feel, based off what we're seeing again this week, again this weekend, is the best risk reward out there, right? The best entries out there are all going to be off aggressive sweeper activity, buying that we see into weakness, pullbacks, and post earnings. Okay, that's where the best risk reward is at, in my opinion. Okay, again, of everything we saw here, and you know, trying to get a gauge on the risk out there over time frames and etc. That's where I think, and you can see here, like here's a good example of what we just saw last week, right? If you chased into the niner, okay, even if you were looking to play tactical, you kind of got stuck behind the 8 ball and ran out of room, okay? But if you waited for a pull and you saw something you liked into that pull, right? Again, even just tactically here, you had a better shot at cashing a ticket. And that's what I mean about that when I wrote that bottom line there. That's what that means. All right. So rather than chasing moves, you let stuff come to you, and that's where the best risk reward is as far as entries are concerned. All right. If you're looking to, and this is what I put on the bottom here. So I would look at post earnings for candidates for swing positions. Right. So that's where I would look for anything I'm looking to swing for more than a couple of days type thing. I would focus on post earnings names and see what the flow and the price action look off the earnings, okay? Everything else, and I mean everything else, I would try to be tactical, nimble, and try to wait on those better entries. All right, make sense? And here's the rundown. So here is everything like we looked at the last couple of weeks. This is everything that went into that post I just wrote up, okay? So here are tactical signals, neutral, squeezometer is a bit hot, you know, short-term trader sentiment above neutral, but as a whole neutral. There's no signal out of there yet, okay? So we have room before we get cooked. Another nice update, it would be cooked. All right, so that's short-term. Intermediate term sentiment, like I spoke about, still favorable, but we're starting to lose a few buy signals. And here's where you could see that. Bull bear indicator, still at zero, bullish, okay? Daily sentiment index, neutral, okay? Weekly retail put to call. This is the retail only put to call indicator, right? We had bullish signals. Now it's neutral, okay? Smart money indicator, still bullish. AAII, if you believe it or not, that thing was one of the few that didn't flash a buy signal. That just did last week. Don't ask me how. okay? But that's bullish. AIM, this is some of the professional money out there. AIM, bullish, NAIIM, that was a buy signal, that's neutral. Fidelity, bullish, fear, greed, neutral, panic, euphoria, right? That was another thing that had it's had a nice bullish signal for a while. Moved to neutral this week, okay? And last but not least, and this is what, like when I say I can see upside in the market, this is one of the reasons why. Hedge funds still net short, haven't bought a thing. Okay, haven't bought a thing. And that obviously twofold runs the risk that if a market grinds higher without them, they'll be forced to chase. All right. And any pullback, two things are either going to happen. They're either going to be right for being in cash, right, as a whole. And we know how rare that is. It's possible, okay? But either that is the one possibility, or the other possibility is they're going to have to find ways to get in this market. You know what I mean? So if they have to find ways to get in this market, they're going to buy dips. And those pullbacks are going to be shallow. All right, so that's intermediate term time frame. Again, when you got things like the bull bear still at zero, AIM, right, which rarely signals bullish, you got a lot of things still in bullish mode, let alone neutral, bullish mode. So you still have a very favorable setup of intermediate term sentiment. And what I mean by favorable is that what that tells me is we get a pullback, right? If we do get a pullback or further consolidation over the next couple of weeks, you're going to start to see these things light up bullish again, right? So that's what I mean by favorable. You know, think about at the top when this virus hit, okay? Bull bear wasn't even close to bullish. Daily sentiment index was cooked. Fear, greed, well, it has been cooked. The market kept running into it. Weekly retail put to call, cooked. Smart money, cooked. Panic, euphoria, cooked. Hedge funds, long, right? Above the red line. The total opposite of what we saw into the lows. So, you know, we're not even close to any of that. Not even close to any of that. All right. And here's some of the confirmation signals we look at. Well, we already spoke about some of them, but sweeper activity, again, not to sound like a broken record, earnings, tough to get a real gauge on sentiment of sweepers now because it's the majority of it's all earnings flow. You know, we can't get a clean read. So it is what it is. Again, post earnings flow is what I would pay attention to. The sharp hedgers, I'll show you in 2 seconds what they did. Very small difference, but they did trim a little bit. Gamma and SPX Gamma has been literally lit on fire and blown up off the crash, right? Like a lot of models out there. Now what I'm hearing out of the Gamma camp that knows a lot more than me and everybody else on here is that, and I'll get more information as we head into a new week, where Gamma is now, according to them, they don't see any major downside potential. We still have room before that happens. Okay, that Gamma will signal things opening up and potentially to the downside. So they think the downside is contained and you get that drift with the bulk of the move happening in after hours. Gap City, right? And that's what we've been seeing a lot of. Okay, so that's SPX Gamma, SPY Gamma, which is very different. That's neutral, and that's it. Shorties, I'm going to get an update tonight, so we'll see if they covered any last week. Okay, if you remember shorts, we're adding shorts for weeks now. So I'll get an update on that. That was bullish, but that could change a bit. Insider activity, remember insiders were buying basically with two hands. That has stopped. Okay, I don't know if I posted it this weekend on my personal, but I've definitely posted it in the room and on private Twitter. But insider activity, not off that buy bullish signal that we've been seeing for the past month. Okay. Let's get to, oh, I got to open my private Twitter here a second. That's not my private Twitter. Oh, here we go. All right, so here is, let me show you what that is. So here is the main indicator, and you can see the small difference there, right? Out of buy signal territory, but look where she is chilling at, okay? But let me just show you here the makeup of some of this stuff so you know. So here's the S&P 500, right? You could see here commercials, right? There's some selling and a little to the short side. And you can see on the charts, you know, very little movement. Okay, the black line is Sharpie money in the S&P 500 here. Okay, so you can see increase almost every week. We went a little sideways and then they trimmed. This is probably one of the most bullish things out there, okay? And, you know, I don't want to make too big of a deal of it unless we see some acceleration here too, but it looks like the industrials is where they're adding and continue to add long exposure to. So that would go to that rotation play, right? And it makes sense, doesn't it? The NASDAQ names have really caught fire. And with these commercial hedgers, and the key word is hedgers, what they like to do is put hedges on into strength, okay? So as things appreciate in price, they put hedges on, and as things decrease in price and they still like it, they're gonna add to, all right? So the industrials, which have lagged, for good reason, they still have an unusual amount as far as the long position is concerned on the Dow Jones Industrial. Okay, they very rarely are net long the industrials, but they have been and continue to be going into this week. The NASDAQ, you could see here, they were heavily short the NASDAQ into the highs, right? Or that parabolia going around in NASDAQ names. And then you could see where they started flipping near the lows there. All right. So small changes. What is this? What chart is this? Oh, this is the NASDAQ, the chart, I think. So small changes, but again, no buy signal out of it, which we've had the last couple of weeks. Here's the riffraff, right? Little curl. This in itself is still in bullish territory. Again, it's still short. So we want to acknowledge that. All right, that's why I still think, you know, when you look at this, you know, the first thing that comes to my attention when I see this is buy weakness. That's the first thing that comes to my head. You know, if there's some major headline and, you know, there's a couple days sell-off and people are, you can see on Twitter, all the bears are getting excited and looking to short anything they can. You know, this is what I want to keep in the back of my head, knowing that, you know, it's still a bullish setup, right? Still a bullish setup. Until we see, the one thing we wouldn't want to see is weakness and they start taking off their position into weakness. Because that might signal to us that they feel the upside is limited from here. But if this stays up here, tough to get bearish. Tough to get bearish. All right, what else? Oh, and the one other thing I wanted to show you guys, and then we'll take some questions. So here, is the Fed tapering. All right, and this doesn't take into account the treasuries that they're trimming this week. Okay, and again, you can look at it both ways. There's a ton of buying, right? They did a ton of stuff into the lows. They're not going to sustain that pace when things finally stabilize. But you know, there's a lot of theories out there, right? A lot of people think the only reason the market went up is because of that. Right? This rally is based off solely that and sentiment. So, you know, it really will be interesting. Like if we consolidate here, right, and the market has a tough time to the upside, it's gonna be hard for you to make me a non-believer in this stuff. You know, come on. They threw in the kitchen sink. They did, right? Like they were buying everything in its mother. And now they're tapering that off. And, you know, coincidentally, we're going to go maybe into a pocket of consolidation for a bit. Yeah, the balance sheet's ridiculous. Ridiculous. I have a chart somewhere of that too. Absolutely insane. Absolutely insane. Now, and here's the other thing too. And that's why a lot of people are interested to hear what the Fed might have to say this week, but they can't be done. That's the scary part about it. They can't be done. There are a lot of headaches out there right now. You know what I mean? There's a lot of sectors have been lit up on fire, and you know, for what they've seen so far transpire, they put those fires out. But the likelihood is there's going to be more fires that show up. Real estate, like that didn't even start yet. It didn't even start yet. All right, people not paying rent. That translates into owners of real estate not getting income that they may need to pay notes. My brain can't even go there. There's so many tentacles in different directions coming out of this thing, you know? So a lot of people, for good reason, say the Fed's nowhere near done. Just as things start to show up, that's where you're going to see them take action, and they're willing to take action. But, you know, the way we got to look at it is that doesn't mean that the markets can't sell, because if something pops up, markets will likely sell, but weakness should be bought, right? If you think don't fight the Fed. So that's the difference. It doesn't mean that weakness can't show up, but as things start to come about and the Fed starts to fire more missiles at these things, you know, they're hoping to put the fire out just like they did right now, just like they did. Yeah, and the dollar too, you know, people that I read that know a lot more than I do on this stuff, they really are preaching that the dollar is the main thing. They need dollar weakness. You know, they can't have the dollar push higher, and that's going to be their ultimate goal here. And that might take, I mean, think about everything they did. Saeed, think about all the stuff they did, and the dollar didn't budge. That's a scary thought right there, isn't it? You know, so we'll see how it plays out. But like I said, we got the Fed this week. There's going to be some information coming out of that. And I think more, you know, people have their eyes on how much more of this they may do. You know, they tapering over the short term and stuff like that. So we'll see. We'll see. All right. I think that's everything for the most part that I wanted to show you guys. As I take some questions here, if there's anything else you guys have on your mind. I see some questions. This is where the city panic euphoria model went to. Okay, so stuff like that. Oh, again, expected. The buy-sell ratio, remember that? You guys remember the buy-sell ratio? So you had a little elevation there, all right? You had some elevation there finally. Remember, this thing was dead on the ground here for a while. All right, let me get to some questions. Let me blow this up so you can see them all here. Any update on the commercials? Oh, the 30-day Fed Fund future. I can get a chart for you. I can't get the chart that you're probably asking for. I haven't seen it around. But I'll see. If I do, Kevin, I'll post it to Twitter. I think I know how you want to see it, what chart you're asking about too. But I'll try to take a peek if I can find something that gives the same premise. What else we got? You're talking about the chart that front runs, right, Kevin? The one that front, yeah. Okay. Where am I getting info, bull, bear sentiment? These are all sentiment indicators from different places. Sentiment Trader is one that offers a ton of sentiment indicators. The stuff like the bull bears from Bank of America, BOVA, okay. Citi Panic Euphoria from Citi. So different indicators from different places. The Sharpie riffraff, that's from COT data. Okay, so different places, different faces. What else we got here? Negative rates on Wednesday. I mean, it'll be, listen, it's something that's going to be interesting no matter what, even if it's just, language that people are paying attention to. It's always interesting to hear from the Fed. Always interesting. Any thoughts on, yes, okay, so like, exactly, Leonard. And that's what I meant by the sector stuff. And I'll give you an example, the breadth. So Leonard's talking about do I have any opinion on the breadth out there? And it was pretty evident, even in the flow, we've been seeing, let me get my marker out. Draw. So you see up here, Biotech? This is Biotech here. Oh, I can't run. All right, and you see that? Okay, everything has lifted off the lows, but some stuff has gone just apeshit, and that's where I think the breadth stuff now over the last couple of weeks has really deteriorated. Like initially we had a rally where everything was participating, and then basically it was like biotech, tech, and high beta that really took a leadership role. And a lot of these things have really extended themselves. All right, so you never want to see this if you're looking to be bullish. Up here, that's danger for a pullback there. So I that's the reason why I think we're seeing such poor breadth out there. Everything can't rally the same like we did off the lows, Leonard, because everything's not the same, right? You got names like Microsoft, AMD, Zoom, right? These names are in a lot better shape than airlines and transportation and hotel. So that's why I think breadth is so disgusting. Okay, but what will happen is if, let's say, we go into a period where they sell everything, okay, and you'll see it on like NIMO and stuff like that, you're going to see bullish signals come off those indicators rather quickly because some of the lagging stuff didn't participate on the way up. And when you bounce, you'll see that full participation again. But before that, you probably need weakness before you see participation as a whole like that. I don't think you're going to see that yet. You can see the difference on here. All right? Like industrials, you see how they started softening here? Look, housing, right? So like biotech went parabolic, and financials, look at healthcare, that was hot as hell. You had a consumer discretionary, these things remained hotter. Even energy, for Christ's sake. The energy names. I got another page of this here too. Hold on. So I think for breadth to improve, we're going to need a little more consolidation or some weakness. And I think that bounce, that rally off of that, you'll probably see some better participation. What do we got here? Mining. What's this one up top? I'm blocked. How do I move this? What is that up there? Oh, energy. Semiconductors, utilities not as hot. So you see this, not a drastic difference, right? But you could see like technology, biotech, healthcare, you know, a lot hotter than some of the others out there. All right, so we could see that not major, but a little rotation the other way. So in other words, a market goes sideways, choppy, and you may see names like some industrials or casinos outperform based off that, you know, it's very possible. Yeah, that's generally the way I look at it is pretty simply put that if you're gonna be quick, right? If you're coming in tomorrow and you're like, you see some biotech action and you're looking to day trade it, right? And just grab a piece off the momentum, you know, that's a different story. But if you're going to start swing positions in biotech here, you know, that's where you want to be careful because it's telling you, you know, on longer time frames, the risk reward is not in your favor. That's basically the premise you want to take away from here. You know, on a risk reward basis, this is not where you really want to start building positions in biotech. You know, you want to look for weakness from here. So that's generally how I look at them. But, you know, all about knowing your time frame, right? Know your time frame. All right, because you could see, like, right here, biotech has been hot. And there was still some money to be made tactically off biotech. Like, there was a lot of juice there, right? There still were a couple winners on a short-term basis left in biotech. You know, it's still hot to this day, but you just really got to be careful for those fades, those reversals. That's where you see those reversals. You ever see like stocks when they're up 5, they're looking strong as all hell, all Twitter is talking about it, and then all of a sudden, a half hour later, you're looking like, oh shit, it's down 3. You get those reversals out of nowhere. You know, that happens here. That's where that happens. You know, so that's what you want to watch out for. You know, what you want to watch out for. What other questions? Anybody else have any questions on anything else? We could talk about names. You guys want to talk about names? We could talk about a couple names. Here's Goldman's positioning indicator. Neutral. Yeah, I bought some LVS. It's post earnings. I had no intentions of buying anything Friday because I'm looking to trim some stuff before earnings that I had, but you know, I had to buy it and I like it. It was down. You know, maybe if it goes a little lower and they hit it again, maybe I'll add. You know, I would like to see even some longer time frame stuff get hit. If they buy something like August into further weakness or where it is here, then I'm interested even more and I'll add some more. You know, casinos are tough. They're, you know, right in the heart of the virus. But, you know, this is where you can make some money if you happen to be right? This is the total opposite of being cooked. And this is interesting. I got this from Seeking Alpha, that stocks in the news thing right here. You know, you have some Macau numbers and stuff coming out. They're looking to open some of Vegas eventually. So, you know, this is what it could be a play on. What did I do with it again? What did I do with it? Oh, here. You know, and Las Vegas Sands, they do well in it, sweepers. They do well in it. I'm sure I lost money in LVS or sweeper activity in the past. I played it a lot, but they usually do well in LVS. You know, they usually do well in LVS. Yes, I bought the same exact line that they played Friday. And then, like I said, I'm hoping they go a little further out, and I don't mind adding. Okay, I don't mind adding, especially now that I've been trimming some stuff that's getting ready to report. That's kind of where I'm in a pickle. Maybe you guys can share what you may be doing. I'll give you an example, right? I own McDonald's off that sweeper, that bazooka, okay? Do you hold through earnings here? You know what I mean? That's the pickle I'm in right now. Yeah, so what do you do? What do you do, Amy? I don't know. So right now I'm leaning towards selling at least some, and maybe leaving a piece. I really don't know. Yeah, like look at CMG, right? It exploded off earnings. I remember I told you, the last correction in 2018, I bought QSR, the Burger King, okay? And I did the same thing. I sold before earnings, and the stock never looked back. Never looked back. So, yeah, I might do that. I might roll again. I might roll and leave a piece. I might do that. So that's the stuff I'm kind of, up in the air, unsure about. The other stuff I'm leaving alone. I'm holding Trip. Okay, I'm holding Trip. I got Boeing, which hasn't been acting well at all of late, but I have September's. I'm holding on to that. But I've done some selling. What's the other one? Oh, here's another one that I have some decent profits on. Take Two. Now you got a niner here. Earnings just when it's starting to look really good. This is where the worst comes out in me. Like, you know what I mean? I don't know what to do. I don't know what to do here. I never found my comfort zone when it comes to selling with time. I've been awful at it. Some of the stuff that I've held, I've sized down on and just got lucky because I left it alone. Take Two, I bought, where was it? It was roughly, was it here? Might have been here, Take Two was our entry. Somewhere around here. Oops. But Take Two had some big time action somewhere in that vicinity. No, I sold AAP. That's been going higher too, right? Let's see. I sold it, I think last week I sold that cash. Oh, it's still right there. Still right there. You dumped it too? Oh, okay. Yeah, I sold it. Same thing. Niner, you got a little more time for earnings there, but that was a nice move. Just to be on the safe side, I took some stuff off. So the stuff like McDonald's, I might end up selling a bulk of, but Trip, Boeing, which I'm down on now. I did roll, but I'm down on now. I'm holding. Trip, I like a lot. I don't mind losing my money with Trip. I don't mind losing my money in Trip. No, all the other stuff, like Crowd and all that, I'm out of. Look at what I left. Oh my God. You talk about getting out. BHVN, that's another one chance I sold. I sold all the ones that are animals. That's what I sold. Oh God, look at this thing. My God. I played this thing twice. See, the first time I sold, they gave me a gift. It looked like I made the right move, right? And then it pulled back, and then they hit it again with sweeper activity, so I bought it again. And I sold it again. And this time around, she's gone. But you never know. Biotech is overheating a bit. Look at these. That's what I mean. Like, this was one of the laggards, and that's why I bought it off the action. But even this had a killer run. These stocks are nuts. SDC, no. For the most part, I've been day trading SDC, John. I never had a swing position. I think one of the times I might have held to the next day just for a follow through, but never had a swing position in calls. INO, that's another biotech, right? With a killer move. Jesus, Sean. You know, even, what about these, just even these mRNAs? Like, you know, one of these, right? One of these, you have some decent sizing, you could be in good shape here. Yeah, you got to get a little lucky. That's all. You got to get a little lucky. Not only as far as entry, you got to get lucky holding these things too. You know, the one that you decide to hold has got to be, yeah, exactly. It's not that easy though, especially when they're volatile. You know, like here, I'll give an example. Okay, like let's say Boeing. Okay, look how difficult it is. I've been up on Boeing like 2 or 3 times on my position already because I had a nice cost and it's evaporated. So there's a good example of holding, right? It's easy to say, oh yeah, I should have held BHVN because it's higher, but a Boeing where I could have took profits a couple times, you know, would have been a good move to sell. That's right, guys, I'm telling you, I've been at this 25 years now. There's no right answer. The only right answer is to have a game plan before, you know, as you're putting the trade on. That's it. What's your game plan? You're going to have time, you're holding it, you got enough time on those calls to do that, then you don't worry about losing those short-term profits. But when you're changing on the fly, exactly, process. When you're changing on the fly, when trades turn into investments, right? Investments turn into trades. When you're doing that, that's where things can get really not good. Let's put it that way. You know, you could have winners and still botch it. You have to, it's got to be part of your game plan. You know, so that's what I mean. Like Boeing, I said to myself initially when I bought those calls that I'm not flipping it. Even if this thing rallies here, I'm not going to sell it. I have that risk reward. I'm willing to take the risk for a bigger reward. Otherwise, there are easier things to trade out there, right? Boeing's a disaster. But I'm making a bet that those sweepers in a contrarian fashion, you know, are going to cash tickets. And I felt like the risk reward was worth it. So that's why that was my game plan. I don't let it bother me. But there's no magic solution. You know, in this game, there's no magic solution, period. But more so even on the sell. Like entries, there's some stuff you can stick to that you could be okay with. Selling, oh, forget it. There's no playbook. No playbook. Intel post, yeah, and that's what I mean. That's what I'm looking forward to. That's what I'm looking forward to, John. You know, good example though. Like you see Intel, right? If you were interested in the name, you had some earnings risk there. Post earnings, there was selling. There wasn't anything exceptional, but there was some flow. And if you were interested in the name, look at that. That's what we have to look forward to. Yeah, Baba is always a mover too, Tree. Always a mover. You got that breather off a niner. A lot of niners out there and a lot of constructive breathers, right? Like this looks really good off that niner. You know, really good off that niner. Some of these names like JD, still seeing buying, you know. So JD is another example. If they sell it off earnings and you see them coming with that sweeper activity, that's your sign. If you're interested in the name, you don't have to buy anything that we see sweepers off post earnings. But if you have an interest in the name, I suggest you pay attention to that because that's where you get those entries. They're really nice entries. You know, Tree, what I was hoping for? We got flow, but it was into strength, not weakness. I was hoping we'd get post earnings weakness in this TXN that we like. But it gapped up a little off earnings here. You know, so those are the opportunities I'm looking at and looking for right now. No matter what time frame you trade too. If you want to stay tactical over the short term, there's some stuff. What are the names? Throw some names. Zoom. What an animal. What an animal. Whew. What an animal. I can't, this was once upon a time the stock couldn't get out of its way. Remember? Off the IPO here? Double niner bottom here. Where did we own it off the flow? Here. You want to see something? Right here. Was it here? I think so. Jesus. Yeah. See, but this is what I'm talking about. This is what I'm talking about. This is a good example. See this? This is the risk when they scorch on the sentiment front. See this? Up, running. You think it's never going to have a down day again. People who bought here, sold here are buying it again because they got FOMO. And then you get this. And I think there was news, though. Wasn't there news, negative news on Zoom Friday? Wasn't there a headline a couple of you guys called puts on? I remember Facebook. That's right. That's right. That's right. Yep, Facebook coming out. Some competition. Work, I don't have any work left, but, you know, it's look good. It's just a choppy name. You know what I mean? It's just a choppy name. But it still looks good to me. Still looks really good. Here's what, if any recommendation I would give on work is to be careful and play it off this, okay? And this is a perfect example. So the allure is always chasing after the move, okay? But you look for this, and then you're looking for sweeper activity into here. That's where I've been trading it. Haven't really been swinging any calls, though. I've been playing equity, you know? But you see here, you got a little saved out of a niner, too. Look, niner here and niner there. You broke the niner here. So some breather here, and if you see that scramble for sweeper activity come in, you know, that would be your go for a trade. I think earnings are in June, right? Oh, that's another name, Sean. What are you going to do with that INOV? I still love it, but are you going to hold through earnings? That's another name I got. I don't know what I'm going to do. You know, so that's, I like this as a little hidden gem. Look at this. It's right before it's ready to go, too. Right before it's ready to go. This INOV. I don't know, Sean. I don't know. I still don't know what I'm going to do here. Yeah, spec flow swing because it's earnings season. So you're going to get, you know, you're going to get a lot of spec action, you know. Company, they're playing weeklies in a name that is a play off somebody else's earnings, that sort of thing. You know, so you're going to get that spec action during earnings season, no matter what. Yeah, that ended up, see, that panned out nicely, but, and I say it about the winners and the losers, this was supposedly a play off Snap earnings. Am I right? Right? So as much as, you know, the flow panned out here and blah, 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 if Snap, if there wasn't that reaction in Snap, who knows if you get this move with that? All right, so that's the stuff, that's what you just got to understand when you play these things. You know, you just got to understand there's added risk, okay? Because I'll give you an example. If what the action that Pinterest caught that day, if it wasn't earnings season, then it's one of those must-own plays. You know what I mean? Aggressive, they really come after it. You know, they got something up their sleeve, but there's a known catalyst out there now. You know, it's a known catalyst. And a lot of times we don't realize it. We don't realize it. I think there was one that didn't pan out. What was the tech name? It was a big tech name that caught action. I think it didn't pan out. On Thursday, for somebody's earnings. Micron. Right? And Intel. Intel reported. Intel was down, came back, but it was down. And, Micron weeklies didn't play. You didn't cash your ticket there. So, but that's fine. You guys have to realize, if you want to play, and trust me, I understand exactly the allure behind playing these type of plays, okay? And I would be honest with you. If I thought it was a losing proposition, like earnings or anything else for that matter, I would tell you it's a losing proposition. You can make money off this type of spec action, but you have to understand that you're not going to have the win ratio that you're going to have off top shelf action. You got to understand there's going to be losers, okay? And if you think the easy solution is stop losses on options, you're nuts, because it's not. Because when they're buying something for 30 cents and you're stopping out for 15 cents, which happens if the stock does nothing, look at Pinterest. You know what I mean? So the key is you got to come up with a decent money management scheme, right? That allows you to win more than you lose and show a profit. And you can be profitable off spec action. There's not a doubt in my mind. But you just got to understand that there's going to be losses. It's spec action. When you're buying something for 20 cents, okay, sometimes it's going to go to 40 cents. You're going to have a double. You're not going to sell it. And then it goes to zero. But that's, when you're buying something for 20 cents, that's why we call it spec action. You're rolling the dice. It's a gamble. Okay. It's just the odds, because of the sweeper activity, the odds have tilted a bit in your favor. That's all. Yeah, exactly. You got to come to that conclusion in this game period. You're right, John. But even more so, I'll get the response, all those Micron call buyers, they lit their money on fire. You're talking about peanuts weeklies. If these big shots want to make a bet, they're not doing it in weeklies. That's the last place they're looking. The last place. W. I cannot believe that move in W. I cannot. What a move. What a move. Did you catch any of that move? This is a crazy stock. We were looking at it, had put selling activity, then some small call sweeper activity. You had some equity. Wow. What a move. What a move. TDO. Oh, Teledoc. Yeah. That's another beast. You know what other stock I sold last week when I started selling stuff? SE. That's another stock. This thing's an animal, this SE. This is an animal. This is one of those names we're going to be looking at on dips for a while now. Now, the only thing now, where'd I sell it? Here? I think, or here. Oh my God. I don't even want to know. I sold it over here somewhere. But now you got a niner, and look at this though. No selling at all. Look at this. Look how tight that is. No selling at all off that niner. Does that look healthy or what? Oh yeah, earnings weakness in SE. That's definitely where you want to be looking, without a doubt. Well said, John. Well said. PTON, this stock looks good. This stock looks really good. I don't know how, who's buying these bikes. I guess somebody is. I know nothing about it. But stock-wise, doesn't look too bad and has caught some decent flow too. Again, earnings may, but if you're playing on a run-up, keep an eye out for some flow. You got squeezers there too. I see a couple of you talking about the LVS to see the LVS flow. Let me get it for you guys. Hold on. How about this? PayPal. Anybody catch that for an earnings run up? That was flow that I liked a lot. The May action. Anybody catch any PayPal? That was some nice action. Hold on, let me get the thing while Steamroom. Oh, this is PayPal. And PayPal, they got really aggressive over here. Where was it? How come? Let me go to this while I can here before I screw things up altogether. God dang it. All right, LVS. Where's that sweep? This is it right here, right? Yep. So this is a missile. Like LVS could catch size. Okay, let's state that first. But even though it could catch size, this is a missile. Like this is a good looking order right here. So it's a $2.5 million sweep. June 50s. Takes out all offers and then some. They're just opening bet, obviously. I think like 15,000 traded. We'll see what open interest looks like, something like that. But it's a good looking order. Nothing closing, nothing rolling, nothing like that. You know, clean. That's why I had to buy some. If it was green, right? If it was up again, I probably don't buy it. I don't like that it gapped here, right? I want to own it right there. But because it was red, you know, even if it comes down again here to fill that, I don't care. And I might add if they hit it again. You know, but that's a nice order. Like MGM, I don't like to play. I like to play LVS and win, you know, if I play the casinos. Wynn's got earnings coming up too here, April 29th. LVS had earnings. Wynn looks good too, huh? Wynn looks interesting. Yeah, exactly. MGM. And you know what other one I don't like to play cash? MLCO, that one. I don't like playing that one at all. It depends, Saeed. That's a good question. It depends. It depends. You know, it depends. Saeed's asking if I would add if there was further weakness and no flow. I don't know. I don't know. What I would, the ideal scenario for me would be this sits here and they hit August or September's. And then I'll put an initial, you know, same exact position on in that line. And then I have nice size, two different lines, you know, one a little shorter than the other. And it give me the opportunity to give this thing a little bit of leash to the upside with a little more time. You know, so the only, if I was to gripe about one thing off the order, believe it or not, is I would want more time on a name like this. You know, that's the only thing. But that's a good looking order. No matter what, there's nothing really bad you could say about that order. It's a good looking order. Here was some of the other action on Friday. IWM was a nice day trade. Anybody play some IWM or TNA? I played a little TNA on Friday. So what happened was, and those of you who are new, you played it with options? Nice, Tree. So those of you who are new, well done, Ryan. You know, that's where, see what I mean? RTY, right? I got to get involved in futures a little bit more. But anyway, I've been saying that forever. So if you're a new member or even existing member, like the day trade stuff, you want to roll the dice on or keep an eye on and see, you know, let something marinate if you're not sold on it. All right, watch the price action, watch levels that you're looking at, whatever it may be. But in IWM throughout the morning, they kept poking around in these weekly same-day expiration 122 calls. And what I like about that is they stick with that line and, you know, they just keep hitting it, right? It's almost like machine-like, spread out around time. And you can see here in a span, I think this might be a 5-minute chart, but you can see here, right? Poking, and then, whoop, right? A little spike there. And they kept at it throughout the day. And primarily that line had about maybe 15,000 total there. And then, you know, just strong throughout the day. And some of the orders look like this, you know, 17 cents. And you can see how aggressive it was. Look, 17 cents. And here's some later on at 39 cents. You know, so they're paying up. You know, and then it looked like later on in the day, they were closing them for, what was it, 80 cents? I think it was. Yeah, and they do it a lot in SPY too. See, and that's where Ryan, RTYES, come into play for you. That's a good thing. Like, I like when they do it in IWM because I get my hands on TNA. And don't ask me why. I have success trading TNA. You know, I have good luck in the thing. You know, I have decent luck in the thing. So that's why, yeah, IWM had the nicest flow, most aggressive flow Friday. But what was I showing you guys before that? Oh, I was showing you the, hold on, some of the action from Friday. Here it is. All right, so here's that LVS action, right? And there was a couple smaller ones adding on those 50s. Then this was a big bet. But you know what's ahead? Earnings. So you had October dated 82.5 Starbucks, 500,000 plus. You know, and a lot of times they're hitting up, yeah, a lot of time here. So, like, for example, if this is post earnings, John, that's something I'm interested in, you know? That's something I'm interested in. And then here was another pre-earnings balloon in Tesla. My God, some of the Tesla action. You talk about size. There's some big size fooling around in Tesla. By the way, you guys see that, and we'll talk about some of these spec names too. Hold on. You guys see this thing? The monster and leaps? That's probably Ron Barron, we were saying. Look at that order. So they're Jan 2022, 1500s. Look at the wood, 83 bucks. Oh, good Lord. So that's 3 million, 3.3 million. The big bet going into earnings with some time. Let me talk about this too. A lot of smaller spec names. For those of you, I know, Ani, you like to trade these little guys with success. A lot of these smaller names are catching some decent action. You know, some decent action. This fuel cell, I mean, this is the biggest piece of garbage on the street, right? Who the hell's sweeping calls in this thing? Look at this. And was caught fire off the sweeps. It doesn't look half bad, besides it's $1 stock. I guess so. I guess so. Now, this is not a play on Tesla or something, is it? Unless they're going to sign an agreement with Fuel Cell. But, and look at this thing react off Niners. You believe this? This little piece of garbage off Niners is gold. You never think about it with $1 stock. Look at this. Niner high, nail the highs. Niner low, nail the lows. Niner high, nail the highs. Niner high, nail the highs. It's $1 stock. Unbelievable. So yeah, they were sweeping calls all day long. Here's a 5-minute intraday, and you can see it caught fire here. This is where the action really got hot. That's when the sweeps really started to come in hot and heavy. And this is what they look like. Yeah, 1,000 June 1.5. 500 June 1.5. 450 June 1.5. So look, over 3 times normal volume. 7,300 Junes, and here's a chart of the flow coming in, and you could see that big stock reaction, right? That's where all the juice came in. You still, Ali, send Spencer an email with your handle. What do you mean you still haven't got? Are you in the room? You're in the room too? What's your Twitter handle? I'll tell him. Write it on there. Ali. Okay. I'll let him know. Otherwise, I'll accept you tonight. STNG. Yeah, but you have earnings. That's the problem with STNG. But yes, had some more flow. Looks really good too, right? 430, 430. STNG 430, right? See, I got the wrong date here. Somebody else was telling me that. I got May 7th. 430. I would keep an eye on weakness. Another name, keep an eye on weakness. If there's weakness post earnings, the CEO might sweep. The CEO might sweep. Remember, he swept them not too long ago, Jans. So always keep an eye on dips in that stock. We know that. Uber, tons of action. Tons of action in this Uber. It had a ton of action, if you remember, into the lows before the virus. And, you know, ton of action throughout this whole process. A lot of action in this Uber. Size too. There's big size in this thing. Big size. When anybody have an earnings date on Uber? I have, I don't know if this is right, the end of May. Is that far out? You know, sometimes if it's May 7th, so this date's not right then. May 7th. Thank you. May 7th. Let me see what other names I added here. This play caught some action, but then we found out why, if you remember. A blog, M&A blog, talking about buyout there. You know another name I played, made a little bit of money on. I was hoping I get lucky. I played the equity. I'll tell you why I didn't play it the way I normally would play it. SFIX, Stitch Fix. All right, so make a long story short, they bombed this thing when the stock was 12, and I didn't do anything down here. Okay, so then into this consolidation now, they're hitting it again. So I bought some equity and then I sold it. Was it Friday or Thursday? Friday, maybe Thursday. Made a little bit of money on, but I was hoping it'd come out like this, you know. But some nice action, this SFIX, you know. The problem is I missed a $3 move already. That's the problem. That's the problem. Yeah, retail is tough. Retail is tough. As you can see, all that action, well, it did move $3, but you can see not an easy mover at all. Retail is difficult. Where is, let me see, there's other names here. CCJ, but that's earnings related. Grub has had some decent action the last couple of days. Looks similar to Stitch Fix. You could keep an eye on that for a squeeze. AAP we spoke about. Crowd we spoke about. Billy, I sold my Billy. I got a tiny little long-term position that I've left alone in there, but Oh, it pulled a little bit. That's good. Let's see. I'm trying to think of any names that really caught my eye here. This Biotech, which is the last one to catch action, hasn't really moved any yet. KDMN, we spoke about that one. Yeah. Trip, you know, it doesn't surprise me it's sitting here. You know, it's the only buying in Trip has been Sharpie buying. Who the hell wants to buy Trip? But somebody is. But I like that. Let it sit there and let them keep swinging away. Match. That's another miss by me. Big miss. Match. Yeah, but Baidu's earnings, Matthias, always catches earnings action. You know, so tough to really get a feel on that. URI, I haven't seen any flow at all. That's a nice rotation name. You got earnings coming up here in URI. These software names are, oh, SYF. I didn't buy any of that. This thing has caught action before in the past. I didn't play anything because it's a financial, but I saw a couple of you guys talking about it, this SYF. Good looking action in it, I'll tell you that much. Good looking action in this SYF. Definitely good looking action. That's it. The software names we all know, you know, they're old news already. A lot of these names, ZS, all these names had crazy runs. Yeah, this match had put selling and then they were sweeping calls and I didn't pull the trigger on any. I don't know what that LTRB PB is all about. I have no idea. And that could be why Sharpies are gobbling up Trip. But I don't know. I'm being honest. I have no idea. No clue. You know, another software name that caught some heat, that MDB. Just the spot I wasn't crazy about. But that's another good-looking stock. Yeah, there's been some nice action. Yeah, now we have earnings, so we got to be careful. But there's been some nice action out there. Yeah, Play. I day traded it. The problem with Play, the reason why I didn't swing it, if that M&A blog news didn't come out, Ryan, I would have held on to it. But that's obviously what that sweep was about. The sweeper hit, and then there was an M&A blog post that came out talking about them being a buyout. Yeah. I mean, honestly, it was a decent sweep. If that news didn't come out, I probably would have held on to some. Because that name doesn't catch sweeps like that. You know, but you know me, I like the unknown catalyst, you know, Ryan? And then when you find out the catalyst, hopefully it's at higher levels. Yeah, I like it when nobody sees a reason why to buy it. And, you know, big guys are jumping in. Kind of like Trip. You know, kind of like Trip. Like, who the hell's buying Trip? You know? And listen, he may not be right. All right? These guys lose too. But obviously, somebody out there who knows a lot more than us is buying Trip. Okay, he's up to something. And he's not buying it, he's not playing cheap weeklies. I mean, he's denting them with risk reversals. FIXX. Oh, yeah. That, I think that's earnings too, right? FIXX. Let me move him. I think. FIXX. Is this the name I was thinking of? July's? Yeah. I remember this. FIXX, a Biotech. Yep. Why, you know this? Do you know this one? But it's earnings. See, that's the thing, Matthias. Like a name that will never catch sweeper activity, magically catches it around, catches a block or a sweep around earnings. And then you'll never see a bet in the name ever again. That's the problem with earnings. That's the problem. And size too. So you're like, wow, somebody's really taking a shot here. But the truth of the matter is they could be selling equity behind the scenes. Sometimes we see it, sometimes we don't. And that's it. We got this, obviously a lot of names out there to keep an eye on for intraday, short-term stuff. I'm trying to think if I left out any. Another retail name that caught some nice action, Goose. All these retail names look the same. They don't look that bad, but they're tough. They are tough, John. They are tough. Energy, I didn't play any energy. Did you guys play any energy? I didn't touch it. I didn't touch an oil name. Not even close. I know there's been some decent moves out there, but I can't do it. I cannot do it. I made enough of a donation. Yeah, EA is the only one that really hasn't caught any significant flow. There's been some bull flow here and there, but they all look good. ATVI really caught quite a few good-looking bets, ATVI. And then Take Two, the one I own, caught, as we know, real nice action with some time behind it. So they all look good, all of them. They all look good. Just, again, guys, it's some of the hot stuff out there, the ones we're oohing and ahhing over that, need breathers, all right? That's all they need, breathers. We need some rotations into names like Goose or Trip and URI, that stuff. What's Caterpillar been up to? Like, these are troubled names, and they can't attract buyers yet. But, the pendulum has swung too much in the other direction. It's a little out of control now. Like this, you saw me post this on my regular Twitter from Goldman. The concentration market cap of the largest stocks has sort, all the go-to names, like all the money's there. All the money's going there. You got to be careful with that stuff. You got to be careful. Here's the market breadth that you guys were talking about earlier. All right, that's because they still can't get the momentum players still can't get the nerve to get behind some of these out of favor names. Oh, TLRY. I played it once. I don't even know how I got myself to play it because I never play these names, but they've been buying this thing. Spec action, but there's action there. Now there's news around this weed play, right? The whole sector. That supposedly, because of the deficits out there, they're going to have to really open up the spigots to weed. Is that the basic premise? Governments are going to have to, yeah. So, without a doubt, Tilray catches spec sweepers every day, it seems. Every day. Every day. CGC, yeah, usually CGC is the one that catches the action. But it's been this Tilray. Again, I don't know why, but that's the name they've been coming after in the group. CGC had a little spec action as well. But usually CGC's catching the better action of the bunch. And, yeah, to summarize my playbook, again, we got to understand we're in earnings season and it dominates everything here, okay? But what would be a good thing to see as some of these laggards report, we want to see some rotation, into a few of the names we looked at. They look okay, but they've been lagging significantly, as opposed to some of these high beta names. So we'll see though, each and every day we look at the information we have at hand, but there's what the market's doing right now. If this goes on, it's not a bad thing. If we go into some choppy consolidation here, that's a healthy thing. So the playbook would be, we want to buy off the dips, you know what I mean? Not chase the rips. That type of thing. Exactly, Matthias. You just said it better. So we want to buy here, see? And I know it's looking in the rearview mirror, but we want to buy off weakness. That's where we want to look. Why can't I draw? Look for entries. And, you want to avoid chasing the highs. That's what you want to do. Because if you're in chop, you're going to get chopped up. But there should be enough range to where if we buy weakness, we'll be okay. Yeah, and listen, understand, we've had a nice rally. We just went over a gazillion stocks that have been big winners. A lot of them we missed. So a lot of money's been made. It gets a little bit tougher, It gets a little more difficult, especially with earnings around. So you want to be a little more selective. You want to be nimble and wait for a setup and see how it sets up out there. That's all. All right, guys. Enjoy the rest of your night. Good luck this week. Busy week. Stay selective. Make some money. Take care, guys. Thanks for stopping by.